Have no fear, the L-shaped recovery is here. Hello and welcome to today's Daily Blitz. What does a recovery look like when it's an L-shape, Nikolai?
Well, it doesn't look very good. In fact, it's not a recovery at all. If your economic indicators are not improving after they've crashed, then you haven't got a real recovery.
Right, so markets don't seem to have priced in the coronavirus very much. So they don't seem to be really caring so much about the potential effect of it, whether or not it's a pandemic or not. However, the data out of China isn't looking all that great, right?
That's right. So there's this big industry of analyzing what's really going on in China because the economic data that comes from the government and Chinese companies is not particularly reliable. And over the last few weeks, for obvious reasons, that data has become incredibly important because the Chinese have the incentive to manipulate it to claim that a recovery is underway when it's not. So over the last few months, all of these companies that analyze data in China based on what is considered more reliable statistics have been following what's going on with the coronavirus, and what they're reporting is that it's actually quite bad. There hasn't been a recovery from the initial shock. That's why we're calling it an L-shaped recovery. Things have gone bad and they're not improved after that. It's not a real recovery.
Even though markets are pricing it in as though it is, right?
Exactly, and that's the key issue here, is the mispricing of the issue. So if we mention some of the data points that have come out over the last few months, what people are considering as this L-shaped recovery signal, you've got all sorts of things, and some of them get quite interesting. You've got search engine traffic, you've got the closures of coffee shops, you've got traffic jams, you've got coal consumption, electricity consumption.
Gambling revenue in Macau?
That's right, and you've got the biggest shock to air traffic volume since the September 11, or even worse than the September 11 crisis. You've got rail traffic crashing, and all sorts of weird and wonderful indicators that are more accurate than Chinese government data is suggesting that there hasn't been the recovery that basically financial markets are pricing in.
So what do you think is going to happen from now? Do you think this information really matters to markets? It's really going to suddenly be priced into the stock market, for example? Or do you think it's going to be continually shrugged off to the point where there is an actual recovery?
The real thing that markets are pricing in my view, is much the same as what's happening in the Western world. They're all looking at what the Chinese government is going to do about the problem. That's what financial markets all around the world are doing now as well. They're looking at not just what the potential crisis is or how the economic data is performing, they're also looking at what the response from the government will be in order to improve things. What's interesting about what's happening in China is that the government sort of measures that have been taken so far haven't led to an uplift. We've still seen that L-shaped recovery. So this may be the first time when there's some doubt about whether the government can reverse the decline that we've seen from the initial crisis.
So effectively, don't trust the government data, don't trust the alternative data, but just look at the government's response.
Yeah, if you're trying to predict where financial markets are going to go, that's the key measure.
Right, well that sums up today's Daily Blitz. Thank you very much for watching. Be sure to subscribe and click the notification bell below, and we'll see you in the next one.